Welcome back to the ultimate candlestick signal video, and I've prepared a special video with the 10 best candlestick signals and case studies. So let's get started with the first candlestick signal, and I not only explain the basic of candlesticks, but also where to trade them, how to trade them, and in which context, because that's very, very important. Because single candlesticks are quite significant and they can be very, very powerful, but only if you trade them into the right context, in the right environment, then your trading may see a significant improvement. So here we are looking at a significant engulfing candle, but not only engulfing candle, but where is this happening? At a previous swing low. So the market was in a downtrend here. The downtrend temporarily paused. Then here you can see the market made quite a big correction wave. You can see all the way during this downtrend, never did the market make any such bullish move. So that's already a heads up. And then you can see here, this is where the candle, the red bearish candle, tried to break into a new low. So you can see this was a breakout attempt here, but the breakout attempt was immediately rejected. And the next candle after this breakout attempt, which just barely closed below the lows, then you can see the next candle was a huge engulfing candle. This green candle is completely outside of the past 4 bearish candles. So it's quite a significant signal. A lot of buyers came into the market, and especially after you would have expected a short and or a continuation of the downtrend, a bullish engulfing signal in that size is really a big heads up and a big warning sign that there's not going to be probably a bearish trend, and the bulls are here almost ready to take control. And you can see afterwards the market jumped higher significantly. So engulfing candles are very powerful, but if you put them into the right context, they will be even better. Here we have a pin bar rejection at a previous lower high. So the market was in an uptrend. It made higher highs and higher lows all the way until here. Then from here to here, the market did make a lower high, which is already here a significant piece of information because it shows that the uptrend very likely is over. And then on the next swing, the market came back into the resistance, into the swing high here with this pin bar. It went all the way above the high, so many traders probably put their stops just above the last swing high because that's what most people do. And then such a pin bar is testing the stops, is fishing for the stops, it's stop hunting. And then you can see once the candlestick wick has caught most of the stops, the price reversed to the downside, closed way below the last swing high, and then afterwards the downtrend was initiated and was continued. So when the market is rolling over from higher highs and higher lows to lower highs and lower lows, and then you have a rejection candle of a previous swing high, that is a very powerful signal. Number 3, we have a pin bar fake out signal. So the market was in an uptrend, made here this double or maybe triple top, and then here is the pin bar. But before the pin bar, that's really where it gets interesting. And you will see this time and time again. Very often you will have a strong candle just before a reversal. Why is that? Because the market and the market participants try to trick the other participants in taking a wrong trade. So with this candle, you can see this candle has the highest close of all the previous candles, whereas here was the last close, the highest close. You can see this bullish candle has a very strong close, higher than any other close and higher than any other candle. So this looks very bullish. But a trader who is waiting for fake outs wouldn't have entered. And now the next candle is a pin bar. And this pin bar is a very powerful signal because it is poking and is sticking out all the way above the previous candlestick highs. So again, it's fishing for those stops. It's fishing for those buyers, the early buyers. And it's trapping a lot of traders into a wrong trade or maybe even causing the stop loss to trigger. And then the next candle after the fake out is an engulfing bar. So this is a 3 candle pattern, which we often see: strong bullish bar into previous resistance, candlestick, pin bar candlestick, fishing for the stops, and then a very strong reversal candlestick to the downside. And you can see afterwards the downtrend really started and the price collapsed back into the previous lows. We have a rounding off, which I'm a super big fan. And again, it does pay off to look for those patterns at previous swing highs and lows, and especially in the context of fake breakouts. So here we have clearly a very strong support level. Here we have a swing low. Then at the next time, the swing low was confirmed. So the market had a support reaction once again here. And then the next time, the market makes it look like it's ready to break out. So this is a very strong bearish candle. And remember what I said in the second example. After a strong bearish candle that looks like a breakout, the next candle, if it doesn't follow through, and the next 2-3 candles here look like there's absolutely no bearish follow through, and after this huge bearish candle, you would expect more selling pressure, right? But it didn't happen. There was no more bears here, no more red candle, and the market just rounded off from very big bearish candle to doji, and then you can see here the market started pushing higher. So this is a rounding off pattern, a strong bearish candle, and then the price slowly rolled over into a new uptrend, and the candles got larger and larger and larger during the uptrend. So rounding off after a failed breakout can be a very, very great signal. And I've prepared another one later during this video, which is also going to be in line with this. We have the New Zealand Swissy here. We have an evening star, very similar to the 3 candlestick pattern that I explained before with the fake out. So we have a strong bearish candle back into the previous support area. Then we have a doji after the strong bearish candle, which already tells us that there's not a lot of bearish pressure, seems like, but it's not enough to now get long. But afterwards you have a strong bullish candle. So we go from strong selling momentum to indecision to strong buying momentum within 3 candles. And then the market rallied higher and higher and higher. So if you can see such a 3 candlestick pattern with this rounding off, with a indecision candle, and those large candles showing you the shift in momentum at a previous support area or a previous swing low, that is often a very, very powerful signal. We have a engulfing rejection candle at a previous swing high. So here was the last swing high of gold. And by the way, this works for all the time frames and all markets, Forex, commodities, stocks, indices, and whatever you trade. And after a last swing high, the market came back into the swing high here, very precise touch point. The market sold off a little bit, and then it looks like the market is really giving you here a strong breakout candle, right? Very, very strong candle, very bullish, closed all the way above it. But a trader that only waits for fake outs will not enter long, but the trader will wait to see what happens afterwards. Sometimes the market will obviously rally and there's not going to be a fake out, but in this case the market immediately collapsed. This bearish candle is a huge, huge bearish candle, very, very strong, completely engulfing the past 2 bullish candles, and the market is immediately back below the previous highs. So it does tell us that there's not a lot of bullish momentum. The buyers are actually not that strong, and quite the contrary, because the next candle the market completely collapsed and we have a huge, huge selling candle. And you can see afterwards the market started this downtrend with very, very strong force. So again, fake outs are pretty powerful, especially if you can get them with a engulfing candle, with a 3 pattern reversal or a pin bar. Here we have an engulfing candle as a trend continuation signal. So we have the top of the market here. This is when then the downtrend started. The market then moved sideways for quite a while, which is normal. Consolidations are normal. The market will never just move in one straight line in a trend or during a trend. And you can see afterwards the market resumed, broke here below the lows with this large candle. Then we have an inside bar, bullish candle, and then the next candle is an engulfing outside bar. So now we are really pulling away from the last swing low. We are really engulfing the last bullish candle. And you can see the market with this candle closed all the way at the bottom of the candle. So there's almost no wick, which is a very, very strong bearish signal. And afterwards you can see the market sold off going on after the engulfing candle. Here we have an engulfing push after a 3 inside candle a breakout or fake breakout. So the market is clearly here in a downtrend on the left hand side. We have a consolidation. We have our breakout candle or continuation candle to the downside here. So we have a very, very strong bearish candle here, right? below the previous lows, very, very strong selling signal, and you would expect more selling. But if no selling occurs, if the market suddenly just dies, or the buyers at least completely withdraw, and you have 1, 2, 3 inside candles, that tells you already that this is not really a seller market, right? You would expect after a strong breakout, a strong selling sequence, because there must be a lot of sellers here, but it's not the case. So you have 3 inside candles, and then after the inside candle, you have a complete trend reversal with an outside candle. So a huge outside candle here, completely engulfing the previous 3 inside bars. Very strong close all the way back at the previous highs. And you can see afterwards the market reversed to the upside and started this bullish trend. Another fake out with a rounding off pattern. So the market was in an uptrend here on the left hand side. Here's the last swing high. The market made a consolidation. The price came back into the previous highs. And now a lot of people would expect here to see a continuation to the upside. But what we see here is something very different. We have a large bullish candle here. We have a smaller bullish candle here. We have an even smaller bullish candle. And then here we have a fake out pin bar, which is not bullish at all. Very, very small green candle. So already we can see this doesn't look really convincingly like a bullish move. And the next candle is a strong bearish candle. So we go from small or decreasingly bullish candles to suddenly strong bearish candles after the fake out. And this is where you can put things together. This is where you can let price tell you a story of what is really happening, from strong buying interest to not so much buying interest to now a lot of selling interest. And then this is when new trends start. So you don't have to pick the absolute top with a fake out, but you can wait until you really have the 3 candle pattern from small bearish candle to pin bar to bullish to a small bearish candle, or a large bearish candle in this case, and then you can initiate your trend. You're not going to pick the absolute top, that doesn't work, but if you have your reversal pattern, that is really where things get interesting. We have another one. We have a multi-wick rejection, and here you can see the price was in a strong downtrend, and then we have a multi-wick rejection. So we have 3 candles with huge wicks, and those show you that although the market tried to push into new lows, there were quite a few sellers that tried to bring the price down. They were not allowed. There were not enough. There were not enough sellers to really continue this downtrend. And you can see here this large bullish candle is completely engulfing the past 1, 2, 3 candles. Even the large bearish candle is completely engulfed by this huge bullish candle. So that's a very, very strong signal. And then you can see the market continued its trajectory upwards, and the uptrend was continued. So those are my 10 candlestick signals and 10 candlestick strategies. I hope you enjoyed them. If you did, make sure to leave a like, leave a comment below, make sure to subscribe as well. And I look forward to hearing from you below the video.